Welcome to the Strategy of the Week presentation for April 26, 2013. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. Tonight's presentation is titled, What's Working Now? The great thing about market pullbacks is they set up the next rally that follows. With the last 6 up market days, could this be the start of the next rally? Well, let's take a look at our market timing graph. Here we have our default market timing graph looking at a 1-year time frame. Looking at the price of the VectorVest composite and the other components of the market timing system. Let's zoom into 3 months for more clarity. Here we can see that we did have a pullback in the market today with today's red candle. That's not unusual after 6 days of upward market action. Of course, it also does close right back at trend line. So the next few days are very important to bear out. Is this a resumption of the uptrend, or will we bounce back off the trend line and resume the downtrend? But this rally is a little bit different from a regular old bounce in the market. First of all, yes, it's extended. It did rise for 6 days. Some of those days were quite significant. But what I'd really like to draw your attention to is our market timing indicators. We look to the components of the market timing system to help us identify oversold or bottoming market conditions. In particular, we use the MTI and the buy-sell ratio. So let's remove the RT. Historically, we look to the levels of the MTI and the buy-sell ratio, the MTI to be below 0.60 and the buy-sell ratio to be below 0.20 to identify bottoming markets. When we reach those levels, we start looking for a bottom. We're looking for a market reversal. The lower the levels, the stronger the selling pressure, and the stronger the resultant rally will be when that selling pressure is removed. If we look at this most recent low, using a date line, and we'll go to the end of day low that occurred here on the 17th, we can see the MTI was at 0.57 and the buy-sell ratio was at 0.09. In fact, I'll take off the RT indicator just to make it easier to see. In fact, if I zoom back out to our 1-year time frame, at all these significant lows, the MTI at 0.68, the buy-sell ratio at 0.10, back here in June, the MTI at 0.62, the buy-sell ratio at 0.06. And of course, if you go back to the 5-year look, the mother of all lows, back at the end of 2008, the MTI at 0.26 and the buy-sell ratio at 0.02. And of course, that mother of all sell-offs led to the mother of all rallies in the spring of 2009. Because these rallies are so strong, we like to take advantage of them, and we've developed techniques called bottom fishing. Now, we've published a special report on bottom fishing techniques, and there are a myriad of strategy presentations based on bottom fishing. But bottom line, these market bottoms offer a great opportunity because of the explosive gains that are possible that make it worth taking on the additional risk of getting in early. So what do we look for? Because if I take off the date line, we can see that these indicators can stay at their bottoms for an extended period of time. How do we know when the time is right to get in? Well, let's zoom back into 3 months. The first sign we look for is a change in the primary wave. We use our timing signal to let us show that the trend has changed from down to up. We should also be seeing some strong movement in not only the VectorVest composite price, but also stock prices. As that trend continues to strengthen, then you'll see green lights in the color guard. The MACD will change from negative to positive, and so on through the progression of our timing signals. And so now we come to the focus of tonight's strategy presentation on, we've indicated when we're going to get in the market with the primary wave change, but what should we be trading? What strategy or what search should we be using? Well, I'll begin with the easiest answer. If you had looked at the VectorVest views, the day we got that primary wave up on the 22nd of April, we could look at the list of Derby winning searches to identify which searches were making the best gains. Let's jump over to the views. If we scroll down in the timing section to the Derby winners, here are the top performing 1-day winners. And I'm focusing on the 1-day winners here because I'm only 3 days off of the bottom. But notice how the best performers are up 6 points in 1 day. Remember, we're looking for that strong price performance. Also notice all of them except for Gold Digger are bottom fishing searches. And this makes sense because by design, bottom fishing searches look for companies with some fundamental strength that have been beaten down in price in the broader market sell-off. Once the selling pressure is removed, these guys really pop. And so this list of searches is always a great place to start if you're trying to find out what's working currently in the market. Of course, you're limited to both a 1-day and a 5-day look-back period. Well, if you subscribe to the Derby tool, that's not a problem. You can customize those look-back periods. But what if you don't own the Derby? Well, long before the Derby tools were ever invented, we developed a method using quick test to identify the best performing searches for both overall gain and consistency of performance. So what we'd like to do is to identify the searches that are making the best gains off of the low from the 17th up to current. Let's move to the Unisearch tool. One of the most common questions we get from new users, particularly in the Unisearch tool, is there are so many searches, which one am I supposed to use? Well, the answer, although it sounds flippant, is whichever ones are working the best. We recognize that different market conditions favor different searches, which is why we have so many. And particularly coming off of these lows, that's when you see new leadership emerge, when you see industry and sector rotation happen. And so typically I'd have the new user start perhaps in the searches group using searches that meet their investor temperament. In this case, we're going to let the Derby results lead the way and show us that we want to go bottom fishing in the searches bottom fishing group. If I scroll down, you can see all the searches that are within this group. What I'm going to show you is a process we call benchmarking that identifies the best performing searches within this bottom fishing group. And if you think about it, there are several ways to measure performance. The obvious first choice is overall gain. But we also need to consider how often the search finds winners and how consistently it does that over time. How much analysis you do or how many tests you run is entirely up to the individual. You need to strike a nice balance between doing enough research that you're confident in your result, but not so much that it becomes a burden and a dreaded task. Essentially, the process is this. We're going to change our date back to the market bottom on the 17th, and we want to know how the stocks found by these searches have performed from that low. So we'll start with Bleyer's bottom feeders. There are the search parameters. If I run the search, these are the stocks that returned on the evening of the 17th. Not that you would have known to buy them, we're just looking for what their movement was from the 17th to current. And so we'll run a quick test of the top 10. Here we can see that overall the basket had 10 winners. Every stock made money. The basket averaged a return of 16.44%, which, by the way, is almost 8 times the market's performance in that same time frame. And this is a good example of why bottom fishing is so attractive, because you get these kinds of returns. Looking at the stocks within this portfolio, heck, you could still do a 10% trailing stop and come out profitable on this basket, even if the trend doesn't play out. That aside, a 16% gain over 6 days is not bad. But that's just our benchmark. This is the first test we've run. So we write down 16.44%, 10 winners, and move on to the next search. If I double-click bottom fishing and rising industries, it'll actually bring up the search and run it for me. So this will be a little easier. I just double-click, and then I have to come up and find my quick test button. 1.45%, drastically underperforming Bleyer's, so I throw this one out. Next is bottoms up. Double-click it. Run the quick test. 22.36%, 10 winners. And so bottoms up becomes my new benchmark, and I continue this process through the whole list of searches within the group. By the time you've made it through this list, you'll have identified the best performing searches within the group. And what I suggest for you is that you record the top performers, the top 3 or 4, because what we'll find out is they don't perform consistently necessarily day to day. In other words, I'm interested in knowing whether any of these top performing searches one-hit wonders. Can they repeat their performance again on the 18th and on the 19th and on the 20th? In fact, you can go all the way through today if you like. So let me show you a spreadsheet of some of my results. Here I've created a simple spreadsheet showing the search name for each of our searches and the percentage gain from the 17th to current and the number of winners. And so as I go through this process, I'd want to look at a couple of these. First of all, bottoms up was our best performer, but I'd also like to look at Jailbreak, Oddfellows Long and Pirates Long, S&P TSX Small Cap RT, and I'll cut it off there just because I'm getting up to 5, and I really like to have 3 or 4 here. The next step is to run these best performers again on the 18th and on the 19th. And that way I can get a feel for their consistency of performance over time. Those results are on our next tab. Here are the results from those series of quick tests, but notice how the performance is falling off. Bottoms up fell from 22 to 18 to 15. Jailbreak 19 to 19 to 16. Look at Pirates Long 19 to 11 to 6. So naturally I want to favor the searches that are getting a consistent result across multiple days. It's more consistently finding winners, and in the case of Jailbreak, look how it found 10 winners in each day, where Bottoms Up fell to 9, and the S&P TSX Small Cap fell to 8. And this introduces the concept of efficiency factor. Not only is it important to get the gain, but it's also important to consistently find winners. A search that was up 20% but only found one winner that went up 100% is not likely to consistently perform for us. And so to help solve that riddle of which of these performed better, the Bottoms Up or the Jailbreak search, which both stayed fairly consistent, but the Jailbreak had a few more winners, to break that tie we use the efficiency factor, which combines the percentage gain with the number of winners. In this case, because I have 3 samples, I'll use the average of the 3. Extending out the spreadsheet then, we can see the average gain was very close, within 1/10 of a percentage point, but the average numbers of winners was enough to make the difference, giving Jailbreak the edge at a score of 187.3. And this confirms mathematically that Jailbreak was the most consistent performer. And of course, you can expand the data set, testing more days to your heart's content, or even testing additional searches. What I would suggest, though, is after you've found the best performing search, come back to the Unisearch tool. And let's go back and look at the search. Does it find the kinds of stocks that I can trade? Are you okay trading dollar stocks? We just demonstrated they perform the best, but can you live with them? Is it within your temperament to do this trade? I might also suggest that you take these search results, put them into a portfolio, and watch them from the market open. And while you're confirming that the market is following through, you can watch the behavior of the stocks to make sure you get good entries. With that, we'll conclude our strategy presentation. I do appreciate you being with us, and I hope you've enjoyed learning how to identify what's currently working in the market. Remember, this time-tested technique is valuable in any market condition, not just market bottoms. If you have any questions about this technique or bottom fishing in general, please give us a call in the product support department or visit the VectorVest University and our previous strategy presentations on bottom fishing. But until next time, have a great weekend.